Welcome to a special episode of Season 2 of The Flow, the institutional crypto podcast, where we take a deep dive into crypto markets with industry leaders. If you're tuning in on YouTube, make sure to like and subscribe to the channel. And if you know anyone who's interested in crypto topics, make sure to share a link to this video to get all the insights. We're flipping the script again. Today, we're joined by Konstantin Shulga, who is CEO and co-founder of Finery Markets, to have another engaging discussion on the latest topics in institutional crypto.
And Nikolai, thanks for hosting that episode. I start to feel that I do enjoy that side of the mic. Once again, thanks for making this episode a special one.
Absolutely, and thanks for inviting me to host this episode. You and I have spoken quite a lot recently about stablecoins and all kinds of different things, but I think the news at the top of the headlines today is, I would say, a recent success for Finery Markets. You've been recognized among the world's top fintech companies by CNBC and Statista, and as a Fast 50 rising star by Deloitte, which I think is a very important accolade for Finery Markets, probably for you personally. And I wanted to ask, what does this mean for you personally, being a co-founder of the firm and recently having celebrated an anniversary, right? What does it mean for you, for Finery, and really for fintech companies in Europe and in Cyprus?
Well, I believe this is just a tremendous achievement for the entire team that been working hard over the last 6 years to make that. And we're also extremely proud to be just one of the two crypto or digital asset startups in the entire Europe being in that category of top 20 fintechs globally, which, I think it's just great testimony to what we've done and what we've invested our time. And I remember we first met probably almost 4 years ago. This was back in New York. Mm-hmm. And we were walking through the Bryant Park, chatting about what are we actually doing at Finery Markets. And back in the day, we were the only ECN globally trying to bring some of those institutional practices into the digital asset space. And we were trying to explain to most of the crypto audience that this is actually the next big thing, that institutions are coming, which wasn't quite obvious back in the day. Mm-hmm. And looking back 4 or 5 years ago and right now, I think that's been just a very exciting journey, and we're so glad and proud to be at the top 300 fintechs. But this is basically only the start. We're only seeing that more and more banks and institutions are coming into the space. So there's a way ahead of us, which we definitely need to work even harder.
Mm-hmm. I actually do remember our first meeting. You're right. I met you after or during a conference that you were attending, and you're right. We took a casual stroll in Bryant Park and I just kind of chatted walk and talked for 20, 30 minutes.
Exactly, yeah.
And here we are, however many years later, in Limassol, Cyprus, of all places, right? I'm wondering, in terms of this recognition, right? Again, it's very valuable. It definitely says something. How do you even get recognized by CNBC? How does this happen? Do you know how they formulate their criteria and things like that? Is there something specific to what Finery Markets does today, or has spearheaded over the years? Like you said, a lot of people, maybe it's not that they didn't believe in your products and your services. They just didn't have the foresight to foresee where the institutional crypto markets would be headed. How did this all happen and come about, if you have any insights for us?
Of course. Well, to your point, a lot of the people just didn't believe that. Mm-hmm. And I do remember when I did talk to a few crypto native trading firms that claimed to be institutional, and they were assessing our product, and then the feedback sometimes was why do we need institutional execution only infrastructure if we can do everything on FTX? I mean, we can have our funds there, we can trade there, liquidity is pretty decent, so why would we need to separate execution from custody, from clearing? And then all of a sudden, FTX case happened, and that what really helped. So that's like to your point that literally it wasn't obvious to a lot of the institutions back then, which is definitely obvious right now. And on the methodology, I believe like CNBC and Statista, they assessed several thousand companies, several thousand fintech companies globally based on their key metrics of revenue growth, client base growth, and just all of the key KPIs. Also, I do believe they have picked different companies from different categories, because we are included in that category together with our friends from, let's say, BitGo, Zodia, Custody, Fireblocks, Galaxy. So some of and the names like Binance, Coinbase. So there are some companies that represent exchanges, like custody parts, brokers, and basically Finery Markets is the only ECN and technology provider, because we're not just ECN. I think for the last few years, we are mostly focusing on building trading infrastructure for banks, brokers, and all sort of institutional clients.
I wanted to also ask, what does this really mean for Europe and for Cyprus in terms of, again, you and I spoke about this, I think, previously during the FinTech Unplugged event, where, you know, the world is sort of segmented today in terms of the regulatory and the market approach to crypto, to stable coins, and things like that. There's definitely distinctions between the US, Europe, Middle East, and Asia that we could all that we see and that we could talk about. But I think the question really is Europe sort of leading the way in a sense, perhaps, again, based on this accolade and based on the fact that, like you said, there's many other companies or brands that we all know and recognize, big companies within the crypto space that are also that have also been recognized by CNBC and things like that. What do you think that means for Europe and really also for Cyprus? I think maybe it's a two-sided question.
Of course. Well, let me start with just giving some background why Finery Markets is in Cyprus anyways. So we started like 6 years ago, and we had an Excel spreadsheet together with my co-founders where we basically compared 20 different cities globally. Like we were picking between Singapore, New York, San Francisco, London, Lisbon, and then Limassol just won in a fair competition. There are multiple criteria, like the language, the weather, the adoption of crypto, like just the ease of moving people around, and the talent here is just great. You can move and allow not just the team members to move here, but also their families, their spouses can work here with the work visa. So like all those different criteria helped. And then of course, the framework for the crypto legislation. I think Europe was at the forefront of that for the last several years with VASP and CASP adoption, which started to materialize back in like 21. Like right now, probably US is taking over. Like US for many, like last several years with the prior administration wasn't the most crypto-friendly jurisdiction. Right now we see a lot of companies are actually moving either back to US or just to the US in order to start the crypto-related business. But for us, as a global hub, we do serve clients from 35 different countries. And it's just great to be in Cyprus, where we can compare and like work with the APAC and Asia time zones, as well as the Americas, like the Latin America and North America. I think, it's just a great hub.
It's interesting that you say, you know, the ease of migration and things like that and quality of life for your employees and their families. Was that a significant consideration when you were looking at different locations?
Exactly, yeah, because like Finery Markets is at its core a technology company. Like we're very like technological heavy company. Like our core is low latency C++. So finding and moving great talent is key for us. And this is also where we believe Cyprus is great. And overall, I even do see Cyprus as a European Silicon Valley. It really you can see that a lot of the new startups are actually opening here in Cyprus. The investment climate is probably, or like the VC money are not here yet.
Sure.
But we start to see that a lot of the Cyprus-based companies are actually raising funds from the US, from the European and UK investors. And I think that trend will only accelerate.
It's interesting that you mentioned that you're witnessing some companies that maybe exited the US market are kind of coming back.
Yeah.
But in my mind, things are still very unpredictable. I mean, again, I follow, let's say, global affairs, politics, and again, and how it relates to tariffs, but really also how it relates to digital assets and crypto. And in the beginning of the current administration, the feeling was there's going to be a lot of relaxation in terms of some of this, not relaxation, but let's say there's going to be a lot more clarity, right? Yeah. On the regulatory front, on how the U.S. government feels about digital assets, stablecoins, and what the future may hold. But it seems like it was a lot of talk, and today it's kind of like, well, I'm not really sure what's going on or what's going to happen. I guess maybe it's really a question of what's your personal opinion on that, maybe not the opinion of Finery specifically.
Of course. Well, we do closely track the regulatory framework, and last week Genius Act was successfully passed and signed. The Clarity Act, speaking of clarity, was also discussed in Congress, and I believe that this also is a great progress, where we have the new category of participants, like the market participants with the digital commodity brokers or digital commodity exchanges. And as long as that will actually pass the Congress, then of course will be more clarity, and then we will all of a sudden have clarity that it's not under the SAC, it's with the CFTC, where we probably need a bit more certainty as what is exactly the security token. Can we actually treat by default that most of the tokens or all of the tokens are actually digital commodities rather than securities, and what exactly is a security? If you're wrapping an equity or an Apple or a Tesla share, then of course it should be regulated by SAC as a security, and then everything else by default kind of be treated as something different, if it doesn't bear equity rights, if it doesn't bear interest rights or some fixed income products. Yeah, it does feel like it should be a default commodity.
It seems like, again, what you just said is something that, again, we all discussed many years ago. Is it a security? Is it a token?
Yeah.
Who's going to do it? Is it SEC? Is it CFTC? I guess maybe they all have a stake in it, right? Depending on, again, what kind of digital asset is it? What does it represent, right? What is the underlying, let's say, asset and things like that?
The difference with the last several years and this year is that you're not getting punished until the regulation is there. So I think that by itself is a huge relief to the entire industry, because last several years, you might get a huge fine for doing something that some would consider a regulated activity versus unregulated or gray-ish activity. So this year, I think that by itself is a huge progress. And we'll see more once the Clarity Act passed and once the CFTC and SSC will finally agree on some transparent criteria.
Yeah, definitely agree. And I think the heads of those regulators have changed, obviously, as they change regularly, right? With different administrations, and hopefully with new people in place, again, they'll finally agree, and we'll take a big step forward. I guess looking into the future, let's say the U.S. market becomes fully transparent, everything is black and white, and we all know kind of everybody's playing by the same rules. Would Finery Markets expand into the U.S. with some kind of geographical presence?
Of course, we already have active discussions and conversations with lots of clients from North America and the US in particular. So yes, of course, once there is a clarity, we definitely have several use cases, and we'll probably be expanding our operations there with hiring local talent.
And where do you see sort of the most growth, if you can share information like that, in terms of, let's say, I'm sure you guys sit down and look at projections or look at which regions may be expanding at a faster pace than others for your business specifically. If you could share some thoughts on that.
I think that's all being quite regulatory driven. So as I mentioned, Europe was leading that for the last several years with the VASP and CASP concept. Certain countries were quite proactive with allowing those registrations. So it's not a full-scale license, but more of a registration. Right now with MiCAR, this is starting to change. The regulators are I would say, approaching a way more conservative strategy. So Europe is definitely slowing down. We still see Switzerland having quite a friendly framework with the self-regulatory organizations that you can register a crypto-related business. We definitely see UAE is the region that is picking up. Like 4 or 5 years ago, there's literally was like almost zero institutional-based digital asset business in UAE. Right now, this is definitely changing. Like all the major players, they are establishing their hubs there. So I think this is quite an interesting region to look at. And then, of course, US. I mean, US in general is the largest economy. Like you just need to be there. And it's great we're having this change in the regulatory framework. So I do believe we need to closely follow like UAE, US, and I think these are the 2 leading regions. Like APAC is also changing because most of the countries, they do imply their own local regulation, local laws. That by itself forces more, I would say, country fragmentation, so that if you are like a retail client that we're able to open an account with some so-called decentralized exchange. It can be like actually decentralized or centralized, but without knowing like where their legal entity is. Right now, a few local restrictions are appearing. So clients are forced to open accounts with their local exchanges, and that by itself creates more fragmentation. So yeah, it will be interesting to see how this will change and create a new landscape.
It's interesting that you mentioned APAC. I remember hearing a lot about Hong Kong starting to accept applications. Again, similar to European efforts, similar to efforts in the Middle East, right? And to me, it seems like perhaps Hong Kong could be, in the future, some sort of regional hub that can encompass that Asia specifically as a hub. But
potentially, yes. We probably see Singapore is a little bit more favorable jurisdiction for the crypto-related projects. Part of that because the Hong Kong, I don't follow that closely this year, but last year when we talked to all of the local clients, there was, I would say, an excessive regulation on the way that you can run like an exchange where it's 100% pre-funded, like almost no leverage allowed, like no concept of credit line post-trade settlement. And that by itself really, I think, slowed down some local growth. There are definitely changes in the regulation going on, but so far I think Singapore is a little bit like it's probably leading that in terms of the crypto regulatory framework.
Great. I wanted to talk a little bit more about technology and get into the details of the
we love details.
Finery Markets offering.
Yes.
You mentioned, it's a lot of programming language, right? It's a lot of code. Finery Markets defines itself or describes itself as a leading crypto ECN and trading SaaS provider. I'm someone who comes from the traditional fiat markets, Forex, CFDs, and things like that. And I've obviously heard the term ECN, many, many times. But can you explain to our audience what ECN really means in terms of digital assets and why, it's crucial, this type of setup, let's say technological setup, is crucial for institutional trading in digital assets?
Of course. So in a nutshell, ECN, it can operate in multiple shapes and forms. But in a nutshell, it's a marketplace where a client can get access to multiple sources of liquidity consolidated under a single order book. Like that's a pretty basic overview. To give more details and more perspective, I would probably talk about the history of ECNs and how they appear. And actually, the first ECN appeared in the US which was like several decades ago, when the market started to, first there was an electronification of the markets, where literally firms were able to trade and submit their orders electronically versus like a chat or a telegraph. And then you started to have fragmentation of liquidity, where the regulatory changes in the US allowed to create multiple like dual listings, multiple exchanges. So multiple pools of liquidity appeared, like one single stock can trade on one exchange and another one. And then there was a need to somehow consolidate that, or also like create a venue where you can trade it not just on a public exchange, but it was probably some sort of a dark pool before it was called a dark pool. So that ECN concept, it allowed for multiple participants to stream their liquidity into a certain electronic matching engine or an order book, where you can aggregate multiple sources of liquidity, multiple liquidity providers. And that emerged, and basically the first broker that introduced the ECN concept was Instinet. And we're quite proud to have the former CEO of Instinet as Finery Markets investor. So he kind of went through that cycle in the US, and he now sees that the history repeats itself just at another pace, where crypto is moving 10 times faster.
Sure.
But sometimes it feels like you're having a time machine because the market is actually going through similar patterns or similar evolution. So yeah, like ECN by itself is not a new concept, but it is new for the crypto. But this was very much expected that the industry would travel that way, because crypto is the most fragmented asset class.
Sure.
And ECN is needed where you have fragmentation, where you have dozens of different venues, where you can imagine that the chances of a client with like a buying interest and the selling interest would meet at the exact same point in time for the exact same amount, when you have like hundreds of different venues, this chance is just going to zero.
Sure.
And then you need to have some sort of aggregation where you can access institutional market makers and liquidity. And this is exactly what we've built at Finery. Our matching engine is non-custodial, so that the client can have access to multiple market makers, like top-tier liquidity providers, the same ones that make markets on the largest exchanges, but without the need to pre-fund. So you don't need to make the choice who you want to trust your execution with, because you don't need who would guarantee you the best execution and the best price, the exact amount in time. And this is our main value add that we started back 6 years ago, that you can have, let's say, 5 different market makers. They will be all consolidated in your order book. It will all be post-trade settlement basis, so you don't need to pre-fund your trading activity. So you can constantly hedge your flow. It's fully electronic, API driven. You can click it via GUI if you want, but 99% of our volume is electronic. And then you basically execute and then settle, whether like straight after you've made the trade or T+1, T+2. There are lots of different ways to settle and structure the post-trade settlement flow.
Sure. It seems a lot like institutional FX and CFDs.
100%.
What's the main difference between institutional crypto ECNs, such as yours, and the traditional ones, again, the Forex and CFD ones that we know? I guess here's kind of my interpretation from, again, coming from the fiat markets. When I looked at order book and depth of market, right?
Yeah.
I remember years ago, this was probably 2021. And when we looked at the crypto markets themselves, again, this is 4 years ago, things have changed. But what I saw when I would look, let's say, at depth of market or order book on crypto, and like you said, like let's say an aggregation of prices from multiple exchanges, or let's say liquidity providers, what I saw was lots of differentiation in the pricing, especially during certain market events, right? And that difference in the pricing could be upwards of, if we can say pips, right? Like in the traditional fiat, this was like maybe 100, 200, 300 pips. I'm talking about, again, certain market movements which were irregular, let's say, right, because of some news events or some sort of market actions that were going on. And I found that to be a very big problem for crypto at the time, right? Like, how are we going to deal with such different pricing, again, from leading exchanges, right? And how do you choose which price to execute when the difference is so big?
That's a great point. We actually published a paper, or like a small research paper on that back in 21, when the institutions were just flowing into the crypto space. Yeah. And we were comparing the trading patterns around different news announcements, like was some Fed statistics or any other macro data, how the crypto markets were behaving like a few years before that, and how did they start to behave in 21. And what we realized is that 21 was a pivotal year when the crypto markets started to behave the exact same way as the traditional like equity and FX markets, where the trading activity was slowing down few minutes before the announcement, like any market or announcement which had nothing directly related to crypto. But we did catch those patterns around, like, let's say, unemployment statistics announcements. And then during those announcements, the liquidity on centralized exchanges, even the majors like Binance, Coinbase, it was actually just widening like the spreads around that few minutes time frame. It was probably 3-5 times wider. Sure. And we did compare that with spreads on Finery Markets back in the days, where we had way less market makers and liquidity providers back then. But even then, we had a way tighter spreads, because when you have a market maker who is connected to thousands of different exchanges, and they know exactly the clients they're facing, that those clients are not like toxic or predatory HFTs, they can actually maintain very tight price also during the volatility and some market announcements. So that's what really is important for anyone in the institutional space. Like, if you're a retail client trying to buy Bitcoin for like $1,000, you don't need an ECN. Like, you can open an account with any broker, with any exchange or whatever. But if you are operating a broker yourself, if you are trying to operate an institutional business or even like a payment business, then you should care, because those bips matter, they count. And in the end of the day, you can save like thousands or hundreds of thousands of dollars just by optimizing the execution. And that's what we help our clients achieve.
Great. Also, getting a little bit more technical, Finery Markets offers a hybrid ECN model with both order-driven matching and an RFQ quote stream system. Yes. I guess, what are the advantages of having this hybrid system specifically for institutional clients?
So we are the only ECN globally in crypto today that has all three types of liquidity pools and execution methods. The core one, which we started back in 2019, is the firm limit order book, which is quite uncommon for any like CFD ECN, and even in the traditional FX space, you won't really see that model. Okay. The idea behind that in Finery Markets is we saw that there's not just a lot of fragmentation, but the quality of most of the solutions on like the API level, even for the larger liquidity providers, is quite poor. So we cannot rely on external execution. We cannot build some sort of like aggregation logic, which even if we had the best code possible, if it relies on the number of external venues, then it's just derivative on a poor technology, which makes the entire setup quite poor. So what we decided to build, we've built our own matching, so that all the market makers, they needed to invest time into integrating into us and basically place orders within our matching, so that it would make the quality of execution the same across all of our liquidity providers. So this significantly reduces slippage, this significantly improves the quality of execution, so you can be filled across 3 or 5 different liquidity providers without any delay or any slippage or any rejections from any one of them, because they're all executed at the same terms. And visually, if someone would look at like our firm pool versus any aggregation, you wouldn't find any difference like visually. but it would just show you there's some aggregated price. But in fact, what's really important is the way it operates. We have this firm execution without any additional latencies because we don't rely on any external APIs. And that's, I think by itself, it saved millions on execution cost to all of our users over those years. And once the clients face issues with alternative solutions, then they come to us and they realize, and yes, like that's where we see the benefit. And then over time, we've added different other liquidity pools, like one with RFQ, where you can request the quote from multiple different liquidity providers, and also the quote stream, where we do have this aggregation, but the execution is actually happening on the liquidity provider side. And especially right now, where more and more institutional grade market makers are coming into the space, the quality of their APIs is improving. So now the clients can decide whether they would stick to our firm pool or also use the quote stream, just because the overall quality of external APIs improved.
And they could pick and choose, right?
Of course,
yes. All day, every day.
They
right?
can, they can combine. Like they can have like the best execution across several pools, like firm and quote stream. They can only go for the quote. They can only go for the firm. Like it's completely up to them. And once again, we are the only ECN globally. I don't even think in the traditional like larger ECN, FX ECNs, you would have like all sort of pools. I think we're quite uniquely positioned here. And we're quite proud of supporting all of those different types.
Maybe you should launch a separate subsidiary of Finery specifically for Forex and CFDs.
Actually, we don't need to have a separate one because the technology today already allows that. So like we've built the matching and we've built the entire stack, thinking that crypto is the mainstream, but we eventually want to facilitate all sort of asset classes and all sort of transactions. So we'll get there. It's just more of a matter of a client demand. So definitely we'll get there.
Because I can tell you that in institutional FX and CFDs, you think like, oh, the market that's been around for 20 years. There's so many liquidity providers out there. There's global banks that are the top tier one LPs and all of this stuff. But from a technology and connectivity perspective, and sometimes pricing perspective, there's still lots of issues under that hood of that car.
100%.
You know what I mean?
A lot of legacy,
today.
A lot of legacy technology. And it's all like the great piece of technology where it's API driven, transparent, and robust. I think there's always niche for such players, so of course.
You brought up an interesting point, and I wanted to ask a follow-up question here. But you let me know if it actually makes sense. Recently, I've talked to quite a few people in the cloud computing space, let's say, right? Or cloud infrastructure space, AWS. Several other firms that basically can provide you with a trading platform that's hosted entirely in the cloud. There's a lot of talk about the, let's say, global trading industry as a whole, right? Not fragmented by asset classes, moving into the cloud.
Yes.
Is this something that you are concerned about? Is this something that you are already using today, you and your clients, in terms of complementing, let's say, physical hardware, servers, data centers around the world to improve, like you said, latency, slippage, all of these different things? And I guess on top of that, do you see the cloud or cloud connectivity taking over or becoming or taking share away from, let's say, legacy hardware and physical hardware and data centers and things like that around the world?
Definitely yes. I think that's a great question and a great technology. I mean, like Amazon and like a lot of their success is actually because they did bring AWS to the market, and like Azure for the Microsoft also driving their revenue for like last several years. Like that's been a revolutionary technology that helps streamline operations and technology across different areas and niches. And crypto, I think, was very important for the entire fintech and the entire capital market spaces, because crypto proved that an exchange can be hosted in the cloud. I mean, before that, it was quite, I think it was very unpopular opinion that you can host a matching engine in the cloud And actually, right now, we see all the major exchanges are actually either considering or already started to pilot some of their cloud-based infrastructure. So that's a game-changing industry in terms of the user experience, in terms of the DevOps and the way you can actually support and scale such businesses. Finery Markets from day one were cloud native. So everything is hosted in the cloud. And this is also a great benefit for any client who is willing to use our SaaS or white label. It's not just some piece of code that the client needs to deploy themselves and then spend months of trying to figure out how to do that. Every white label client of Finery Markets today is part of our cloud SaaS solution. So they basically have another account type within our overall ECN. And everything is hosted with us. They don't need to care. They don't need to, excuse me, like the client, they don't need to care. They don't need to bother about how to deploy that. We are SOC 2 Type 2 certified. We're the only ECN and crypto technology provider that has SOC 2 Type 2. We're running through the ISO right now. So the infrastructure is extremely robust. We've been operating as the longest standing ECN for like 6 years with the highest uptime. And we keep scaling that. So like it's extremely easy. It's a very fast time to market for any broker bank that wants to deploy their trading infra. They just have a cloud-based white label account with us. And then in a few days, they can start serving their clients. I mean, that's literally insane if you think about it, comparing from the TradFi. And I've spent almost 15 years with large traditional banks. I was a managing director overseeing the entire electronic trading division for like the largest Eastern European bank. And literally it took us ages to implement something because nothing was cloud-based, and I think this is just a great shift.
I remember those days. I wasn't on the trading side, but I was involved in some of that stuff at retail brokerages in the US, and yes, I completely understand. And those problems, unfortunately, continue to exist today. But it seems like you, again, another testament to you're very forward-looking. You do all of these things proactively when nobody else is. You know what I mean? Like you see the opportunities that will happen in the future, and you kind of act upon them so that when they do happen, and like when cloud computing or cloud storage or whatever we want to call it really takes shape, like you said, your clients can be up and running in a few days.
100%. And like, one thing which I'm really proud of is the solution where imagine your original exchange that has its local client base, but all of a sudden you need to compete with all the tier one largest exchanges in terms of the depth of your liquidity. So what would you do? You either buy a piece of software or you try to run your own matching engine. Like that's a huge burden in terms of technology. Then you have this empty order book and you are trying and call like 10 different market makers, like please integrate and please make markets for me. And no market maker is willing to support an empty order book. Like there's no business, so there's a huge upfront cost, plus there's a huge capital allocation cost, like just for them to allocate some capital to keep it with that exchange. So before this exchange can start a business, they already need to spend millions and spend like years trying to build and solve this chicken and egg thing. And with us, this is exactly the solution we offer. We tell them, like, guys, you don't need to worry about the technology stack. You don't need to worry about the liquidity. You just plug into our cloud-based SaaS, basically replacing your matching engine with our technology, where all of the leading market makers are already there. And this just brilliant solution for any regional exchange or a broker that wants to have immediate access and have decent execution quality. Like that's a no-brainer.
It's pretty awesome. You and I touched upon stable coins. We talked a lot about stable coins in our previous interview. You guys can check it out on YouTube. Just Google search Konstantin Shulga stablecoins. You'll find the video. But I wanted to jump back into stablecoins with just one question, because I think it's important. Because previously you've emphasized the need for off-chain bridges, unified settlement networks, and private execution environments to scale stablecoin adoption. And I wanted to ask you, like, in a little bit more detail, can you elaborate on each one of these components and kind of how they could lead stablecoins forward?
Course. First, let me also give some background. Like, we love stablecoins. We started to speak about them long before it became a hot topic.
Yeah.
Like, honestly, I remember I was invited to one of our panel discussions with our investors, where like one of our investors was hosting the session was Tom Closer, the former CEO of Thomson Reuters. And the question was, this was probably 2-3 years ago, and the question from the audience was whether USDT and Tether is a huge threat to the digital assets and US economy in general. And this was quite a popular opinion back then, like that stablecoins bear a lot of risk. This is like a black swan of the industry.
Yeah.
And I said, like, I have a completely opposite view. Like, honestly, I think stablecoins is the best thing that happened to US economy in many decades. Because right now, all of those stablecoin issuers, they are acting as the buyers of the debt, the national debt. But even besides that, everything is priced against US dollar. Like, if you think about the price of Bitcoin, Ethereum, and any other coin, you don't think about the price of Bitcoin in Indian rupee, even if you're living in India. Like, you don't think about the price of Ethereum in any local currency. You're always benchmarking that into US dollar. So the stable coins helped power global economy just because of the crypto adoption. Plus, it acts as a great instrument to save from inflation, local inflation, or some capital restrictions. Like, there's a lot of use cases. It just give the US dollar a great new chance to like even bigger adoption globally.
Sure.
Like, that's just some background. So Finery Markets, the way we've designed our platform allows different clients from different countries interact with different regulated market makers and also settle in the local currency. So by design of the system, a client from one country can trade with the liquidity provider from another country, and they can bilaterally settle in whatever preferred currency, and most of those flows going through the stablecoins. So historically, the share of trading of stablecoins and local fiat on Finery Markets was quite high. And we just recently launched a new product specifically for the stablecoin issuers to help them solve 3 core issues that we observe. Like, one is a stablecoin issuer, in order to adopt their coin, they needed to be traded somewhere.
Sure.
So when they want that adoption, they normally like call different exchanges and try to list it there, which is a huge and lengthy procedure, sometimes get rejected. So with our infrastructure, they don't need this listing procedure. They just have this code and this piece of software with the marketplace where we have already the widest institutional network. So like, that's one thing. The second thing, we have a list of market makers that can support that coin. And we can do a roadshow for those stablecoin issuers, like that the market makers are happy to support the pricing. And then thirdly, they can create as deep markets as they want because we're a non-custodial setup. Like, they don't need to allocate any capital with Finery. They can directly onboard their clients the same way they do mint and burn of their token today.
Yeah.
They can provide liquidity for their token versus any other token or any other cryptocurrency just by utilizing our infrastructure and our network of liquidity providers. That's just offering a great adoption and a great use case for any issuer, that they don't need to get locked with a centralized exchange or a decentralized exchange.
Great. Awesome. We are almost out of time. We have 2 minutes.
Sure.
Going all the way back to the beginning of our discussion, Finery Markets decided to set up base in Cyprus and all the benefits. You've been living here for how many years? 5, 6?
Yeah, almost 5 years.
5.
Yeah.
So last question is a personal one. So how does Konstantin find Cyprus? What does Konstantin do in Cyprus to relax? You know what I mean? Like, decompress? Like, is it windsurfing? Is it free diving? Is it going in the mountains?
It's
share some details.
You know, my work-life balance is that my life is my work, basically. So I do like either less work or more work. I work probably more during the weekends because you are not distracted with some client calls or like anything else. But yeah, what I do enjoy about Cyprus is, by the way, Konstantin is a Greek name, so it feels like home for me.
Sure.
Partly because Konstantinos is a Greek name, and I have my Greek course in a couple of hours actually. So I did start to learn the language.
Yeah.
And yeah, I do like the mountains. Like hiking is great here. I strongly encourage if anyone is visiting Cyprus, we can do a couple of hikes together. It's a great place, and a lot of sport activities like water sports. Just some quality family time. I have 2 kids, 2 boys, and the quality of family time here can be quite nice.
Awesome. Well, Konstantin, thanks for taking the time to speak with us. I know you're very, very busy. It is a Wednesday or Thursday. I'm not even sure what day of the week it is, but thanks for joining us, sharing your insights, and thank you everyone for watching and joining the latest episode of The Flow. Like, subscribe, and share, and we'll see you next time. Thank you.